Doing well today. Can't wait to get this going. Being live streamed. Let's get a link and we'll be rocking and rolling. Can't believe it's Friday already. All right, there we go. Takes a second, but here we are. There you go. There's that. There's that. And we are live. We're cooking with gas here. Good morning, Carrie. Look at that. First one in the house. George, Angie. And thank you for that wonderful testimonial, Angie. I do appreciate it. Very kind of you. We got Eagle Beagle, Clay, Omar, Timothy, Daniel, Ivano, Henry, Heather, CJ, David, Art, Zen Master, Harry, Jill, Jody, Dave. We got the whole mishpucha here. Gary, Wayne, Steve, Carlos, good morning. Tom, good morning. Robert, good morning. RP, War Dog is in the house. Dave is in the house. Penny, good morning. Dave, Robert, hello, hello, hello. Another David, Ray, Peter, Cam. Hey, Cam, good morning. Happy Friday. Let me go ahead and share my screen here. So that you guys can see my screen instead of seeing my mug. All right, there we go. Let's continue this. Richard, Brian, good morning, Brian, and thank you again for that code. That is fantastic. Angie, Rick, Carlos, Elizabeth, Ward. Where is Ward? Where is the Moondog? We still have an economy. Pat, Ralph, Frank, good morning. Good morning, good morning, good morning. Daryl, good morning. Wow, look at that. We have 136 people watching in less than 107 minutes. That's pretty good. I like that. Daryl's in the house. And if I don't call out your name, I apologize. There's like a screen full of names just coming down. We got Doc, Dennis, Donald, Daryl. Everybody's in the house. Folks, if you want to email me over the weekend, please do. Now, I'm going to be playing hooky this weekend. Let me tell you what I'm doing this weekend. My son, my eldest son, he's 22. He's graduating from UF. So I am heading to Gainesville today after the market closes for his graduation tomorrow. But I'll be back. I'll be back Saturday night, and I'll be back at home on Sunday. So if I don't get to your email, morning Samuel, Doc, Dennis, good morning, Duzzy, good morning. So if I don't get to your email, if you send me an email, if I don't get to it, I'll get to it before the end of the weekend. I just want to spend a little time with my son and congratulate him. Good morning, Rochelle. Happy Friday. Thank you, Penny. Thank you. Yeah, now he's going to be applying to vet schools, and we'll see how that goes. That's why I have 4 dogs and 4 cats, you know. Thank you, Jill. I appreciate it. I can't believe. Hey, Gaston, good morning. I can't believe time flew by so fast. Thanks, Angie. And by the way, Angie, thank you for that wonderful. Angie went to trading schools and gave me a really good feedback. I do appreciate it. Moondog in the hospital. Oh, Moondog, we're all. Give us an update, Moondog. We got to get an update from you. There you go, Ricky. Thank you, Gary. Rebecca, good morning. Ray, thank you. Deanna, good morning. Gustavo, thank you. I still have one. Ooh, look at that. From Texas A&M. Great. Yep. That's right. Clay. Nice. Oh, that would be very nice if he can get in there. But thank you, Angie. All right, let's talk about the market. We've got a lot to talk about. We do have a lot to talk about today. There's a lot of things going on. I do appreciate it. Thank you, Angie. But actually, it wasn't 17 losers out of 220 trades. It was actually only 10 losers. But that's okay, Angie. I'm very proud. Very, very proud. Very, very proud. All right. Yeah, we are praying for you, Moondog, and we're hoping things go your way. Please send us an update so I could let everybody know. Thank you, Rebecca. I will pass all of this on to Josh. His name is Josh, by the way. Yeah, real simple name, Josh. Thank you. Folks, remember, Cam and Gustavo show. Thank you, Robert. It's okay, Angie. 17 out of 220 is fine, too. Really, it's all good. Um, uh, uh, Anyhow, I will pass on all the wonderful things to him. Thank you very much. Now, let's talk about the market. So we don't have any Fed data today, which is kind of odd, right? And we don't have any earnings today. The only earnings the market is going to go from is the earnings from last night, and the earnings from last night, which we will go over, included Lilly, which did pretty well. So far, the Nasdaq is down just a hair. I mean, this is not anything. This is not anything really. This is total randomness. Also, we are experiencing very, very crucial levels. Thank you, Rick. Thank you, guys. Yes, we are praying for Moondog. Good morning, Nathan. Good morning, Richard. Good morning. We already talked to Angie. Yes, Cam and Gustavo show from 10 to 1 every day. If you have your customer service questions, they will take care of it. Please, I am useless when it comes to customer service, but Cam and Gustavo show is the way to go. From 10 a.m. to 1 p.m., please find a link in customer service. I don't have anything to promote today. I'm just here out of the goodness of my heart. I don't have any links to give you except for the VIP room that's happening at 11 a.m. If you want to see a replay of the stealth surge, please do. Here's a link for that. Today's going to be the last day we're watching it. If you want to see seasonality windows, that's that. And if you want to join me for my 11 o'clock session, which will be very hot and heavy, and I will be at the office today with Matt, please do. Gabriel, good morning to you as well. All right. So market's kind of flat, not really anything going on. The question is right now, the big, the trillion-dollar question is the S&P 500 going to crack through the 100-day moving average and the 8-day EMA, or is it going to back down and start coming back down? If we start coming up here, we are going to start getting a lot more bullish. If we start coming down here, we're going to revert to bearishness. No, I don't have an answer. I don't have a conclusion for you, but hopefully by the end of this segment, we will have a better idea of what we can expect. Now, am I more bullish or am I more bearish? I'm actually quite neutral. Yes, I've seen the layoffs and they're not pretty. The big question right now, are we going to have a soft landing or are we going into a recession? We will have more data on that next week. I also believe the market's going to be very cautious today and tomorrow ahead of that data, because let me show you the data that's coming out next week. This is very important. Please pay attention to this. This is next week's data. Yes, that's right, Cam. I agree with you 100%. And by the way, again, if anybody needs to get a hold of me, if you have a trading question, if you want to complain about a program, all good. Just send me an email, roger@rogerscott.com. If you want to send me a nice testimonial, that's my email. Exactly what they do, Cam. But let me show you guys something. Next week, we've got big data. We also have monthly option expirations next Friday, okay? Now, a lot of folks were asking me about this Friday, and they were asking me about what I think. And I'm always saying, hey, what is the next thing the market's going to discount? Now, yesterday we had a very benign report. It was an employment report. It was very benign. Matter of fact, on a regular February, we wouldn't even talk about it. We wouldn't even know it happened. The market wouldn't move. Yesterday, the S&P 500. No one's complaining, Eagle. I'm being sarcastic. I'm just being sarcastic. Although we are in 2 drawdowns right now in the pit, we haven't been in 2 drawdowns in the pit in, I think, 3 months, maybe 4 months. I don't know, but we're still in those positions. But if anybody's complaining, it's me, Eagle. I'm going to complain. I'm my worst critic. I'm going to complain more than anybody else about me. All right. Okay. So why do I think the market is going to kind of cool off a little bit and be in a wait and see mode? Let me explain. Well, Monday, Mondays tends to be a more of a rotational day. Not always. Remember, everything I'm saying is based on statistics, not what's going to happen next Monday. I've got people asking me, Roger, is today going to be that 75-25 day? And I explain to them, I have no idea. It's a statistic. It's a probability. It's based on 1,000 coin flips. I don't know if this coin flip is going to be heads or tails, but I know out of 100 coin flips, we're going to get 80 heads, 20 tails. Does that make sense? So that's why when you ask me, Roger, is this stock going to go up? I have no idea. I deal in probabilities. Okay. Daniel, it's the first time we've been in a drawdown in months. Literally, ask the people here. They'll tell you at the exact right time. We'll get, of course it will, Ron. Of course, Daniel. But it's just, you can't avoid this stuff. You can't avoid it. I think we've had like 22 or 25 winners in a row without having a loss, something crazy like that, or maybe 30. I don't know, but we have not had any losers. And by the way, those two stocks are still open. We may have winners on them too. We don't know. We just have a drawdown. I haven't even had a drawdown in 3 months. We've been just taking winner after winner after winner like that. All right. So why do I think we're going to have a little slowdown in a wait and see mode? I'll tell you why. We have PPI next Tuesday, and we have CPI next Wednesday, and we also have industrial production. We also have retail sales, and most importantly, we have consumer sentiment. Next week, we have a big week. So we're going to get a lot of data that the Fed is going to use to determine whether or not they're going to lower rates in September. Therefore, it's extremely pertinent. That and the market's going to be keying off of this data. So if we see some consolidation in anticipation of this, I wouldn't be surprised. Probably more towards Monday, if I had to guess. And also remember, S&P earnings are behind us. If you know how to avoid being surprised market, let me know. Union Hospital, Indiana, but appreciate you from broadcast every day. I'm glad to hear that, Gary. And I hope you're well. I hope things are going okay for you. What is it? People get sick around August every year? Yeah, we've all been there, Daniel. We've all been there. Some more than others. So again, we have a lot of Fed data next week, and more importantly, we have a major option expiration on Friday of next week. Okay, a lot of people didn't realize that, but next week we have monthly option expirations. So be careful. We have a lot of stuff to get through, and there's a lot of data. Now, how's the market reacting? Crude oil. Remember, crude oil is a very, very important indicator of whether the economy is going through a inflationary period, a deflationary period, or a recessionary period. Typically, when we're in a deflationary period, oil just kind of hangs around. When we're in an inflationary period, oil goes up. When we are in a recessionary period, oil drops like a rock, because when you're in a recession, it's like COVID. It's like being in COVID, close downs. Less cars, less airlines, less things moving around. You don't need energy. So, yes, I could give you this. Sure. I made it for you so I could give it to you. Might as well give it to you, right? Here you go, Art. There you go. All right, let's continue this. Let's continue. 1 second. Let me just put this here. Helicopter Gal says, I entered 2 different time frames, put orders on one you're holding based on the weekly chart, so not good, but next week I think your trade should be good. I think so too. We'll see. The problem is we have earnings next week on Wednesday, Penny. So we will see. I'm still patient. Everything hung up at key resistance level, Cam, and I'll talk about that right now. So yeah, you guys have the link. You guys have the link for this, okay? So crude oil is at the 200-day moving average. Again, we are at a major average. If we were above here, I would say we think that we're out of this. The coast is clear. We're not going to go into a recessionary period. But we're right at the 200-day moving average. It is, Rebecca. It is. And the markets have been doing this and this, like a bag and a shake without any follow through up or down for the last week, which is why we're not able to catch a break. But anyway, no excuses. There's no excuses. So you see that we have to move from here. We're either going to move down or we're going to move up. The problem is I can't gauge this right now because we are literally at the 200-day moving average. So if we come down from here, this will be just another leg down. If we come up from here, then this is going to start looking bullish. I do want to warn you, we're still below fair value level. We're below the 50-day moving average and we're below the 100-day moving average. And this is a pretty steep breakdown. The good thing we have going for us is that we have really strong support here. So there is a good chance we can come up here and then break down. Honestly, if you're an energy trader, I would wait till we're above this level. I'm going to show you this level right now. Right here. This would be my first level that I would be dipping into energies, and this would be my second level. So I would not go long energies till we're above the 100-day moving average, which would put us at about 80, 79, 80 on crude oil. And the next level is 83. And you'll understand why 83. This is that 83 level right here. So I want to see a break above. Otherwise, this is no good. This is no good. This does not look great. This looks like we're getting back into a normal market economy where crude oil just doesn't do anything. So which would be good for the market, or a deflationary environment. So again, be careful here. We may just come right back down. We may just come right back down. What about the 10-year? Well, we saw the 10-year pull back. This was a panic that we're going into a recession. We're going into a recession. Money came out of the stock market. And since that time, money has been going into the stock market. The caveat is, see these two red lines? This is getting out of the first danger zone, but this is the second danger zone. We're still not at this level, and we're at the 8-day EMA. So because we're at the 8-day EMA, and we can just come up here, again, I would be very, very careful. We don't have a clear bias right now. Again, we don't have a clear bias right now. You see that? That's not good. So we can just as easily come up, and we can just as easily go down. Roger, you're making this really difficult. No, I'm not making this difficult. We're at the 200-day moving average on crude oil. We're at the 8-day EMA for 10-year notes. How the hell can I gauge this market? We're literally right there. And it's not just this stuff. It's other things too. Well, maybe gold can give us some idea. Well, gold has been moving up. And remember what I told you guys. We still have a gold stock in one of our swing trading programs. There was a reason why I put it there. Now we are above the 8-day EMA for gold. Now, the cool thing about gold is gold can go up in a inflationary market and a recessionary market. The only time gold doesn't go up is when you have an amazing bull market and everybody's putting their money in tech stocks and blue chip stocks, and they're like, gold? What do I need gold for? What the hell's going on? I'll talk about that, Duzzy, in a second. I'll talk about that in a second. So this is a good sign, and I don't need it to go up a lot. I mean, if gold goes up here, it's an all-time high. I am bullish on gold right now because I think we're still going to stay I think the question now is, are we going into a recession or are we going to stay inflationary? I think we're still behind the ball, and I still think the Fed has more work to do. I still don't think they're going to lower rates in September. If they do, I think it's going to be a quarter of a basis point. But I don't think the economy is ready. And I'm going to agree with the Fed in saying that one bad report or one negative report is not going to, drive the market at all. So again, I'm neutral to bullish on gold right now. It is actually one of the few commodities that I really like right now because, again, we have 2 out of 3 covered. We have the If we have a recession, gold is beautiful. If we have inflation, gold is beautiful. If the stock market starts really rocking and rolling, maybe not, but I'm not seeing that just yet. We have a long ways to go till that happens. So I think we're going to have a lot more turbulations and heartburn, especially next week. And I don't think having gold is the worst thing in the world. Okay. So what about the bond market? What about the bond market? Well, as I mentioned before, the bond market has an inverse relationship to interest rates. This is interest rates going lower. This is interest rates going higher. Interest rates have been going higher now for 3 days straight, coming off of this right now. So they went really low and now they've been coming up. And now the question is, what are they going to do next? So gold is saying, what are we going to do next? Crude oil is saying, what are we going to do next? 10-year bonds, what are we going to do next? What about volatility? Well, volatility is slightly below the 8-day EMA, but again, here's my first danger zone. We're still above 20. And here's my secondary danger zone when we're at 15. Ideally, we should start buying stocks when we're breaking the 15 level. Yeah, so we're still not what I've said to you so far is the market is not saying, okay, we're ready to go higher again. That's it. We're done with all the crap. It's all behind us. We're ready to go down. We're not there quite yet. The market is still in a wait and see mode. And again, we have a lot of Fed data next week. And if this data is not good, remember, a stupid little employment report like this yesterday, let me explain to you how sensitive right now the market is. This report yesterday, which was nothing. This report told us nothing. This report was like, I wouldn't even know this report happened most Thursdays. This report, first of all, it was completely in line. Second of all, it's been doing exactly what it's been doing for the last 3 years. It's showing absolutely nothing bad happening, and it moved the market 30 points. 30 points on the SPY. So the market is becoming, thank you, Eric, the market is becoming extremely sensitive to Fed data. And now, next week, you got PPI, CPI, retail sales, sales minus autos, consumer sentiment, building permits, housing starts. So you've got a lot of data, We got to be very, very careful here. We're not out of the woodwork yet. All right. So let me go through, put all the pieces together for you. And then we will, here we go. Let me put everything together for you. Again, we got to be careful. Good morning, Julian. You got to be careful. Sharp gains after U.S. labor market data helped alleviate concerns about a significant economic downturn, while investors wait new batch U.S. economic data due next week to reinforce signs of resilience. You see where the market's at right now? Now, because we went through what we went through, this has a much deeper meaning to us now. Do you understand technically the mark? Look, right there. And that's this is commodities, not even stocks, okay? So we're waiting to see, are things getting better or are things falling back? Can you imagine if the report comes out that we're not getting better? Oh, man. Whew. Hey, Kenneth. Good morning, Kenneth. Good morning, Darren. Good morning, Darren. So everybody's in a wait and see mode, which is why we're seeing a lot of volatility and the market's going nowhere. It's like being shaken in a bag like this. That's why swing trading right now is tough, because you see one day up, one day down, one day up, one day down. You don't have any follow through. All right, chip stocks gained ground. Why were tech and chips strong yesterday? Well, On Semiconductor had a good report. ARM had a good report. That gave a little juice to chip stocks today. That's why we go through all of this. We call the BS. Monster Beverage didn't do. That's a consumer discretionary stock. They did not do well. Again, if interest rates stay elevated, it will not be all that great for retail stores and consumer discretionary. This is the report that came out yesterday, which is a complete nothing burger, but it showed very clearly that the market is very, very sensitive to Fed data right now. The market is super sensitive to Fed data, super sensitive. Okay. Kansas Jeffrey Schmidt said he's not prepared to endorse a reduction in interest rates with inflation above target and the labor market remaining healthy. Some signs of, I agree with him. We're close, but we're still not there yet. I couldn't agree with him more. I couldn't agree with him more. I still think November. But the futures have a different mind. They think there's going to be futures are definitely considering one in September. They're pricing it in at 100%, 45 of a 25 basis point, 54% of a 50. I don't think we're going to see anything in September. How about that? Consumer price inflation report, retail sales figures in July scheduled for next week. Looking for signs of a soft landing. It's a wait and see mode right now. What is Europe doing in light of all of this? Well, Europe is up 0.75, gaining positive momentum from strong performance from Wall Street. They basically keyed off of us yesterday. Fears of U.S. recession boosted market sentiment, easing fears of U.S. recession, easing fears. So the question is, next week, are we going to go into a recession, or is the Fed going to save the day? That's where we are right now. Okay. China wiped out early gains, closed lower as perception grew that better than expected inflation readings primarily stemmed from seasonal factors. Boy, they're being tough. Losers in consumer products and service stocks led the overall market lower. Semiconductors and banks gained ground. That's very good. Financials and chips. Excellent. All right. Japan closed higher, tracking gains on Wall Street due to better than expected unemployment data. You see what I mean? Like, nobody would even think about this unemployment report. Nobody would even talk about it. It would be like, what? Unemployment's 233. Okay, great. Eased recession fears? Really? Folks, I'm going to tell you something. Nothing about this report eased recession fears. This report has not changed in over 2 years. It's been exactly the same. It goes between 200 and 250 every single week. Tell me I'm crazy. Penny, I think after next week, the 0.50 will go to zero. But notice, this report has been exactly doing this. Literally. Look at the 4-week moving average. 238, 233. Does that look like a change to you? No. So this is just hypersensitivity to things that they think Wall Street is being moved on. But next week, it will move on that. Again, it's important to connect all the dots. Expedia did well. This will help consumer stocks, going out stocks. Paramount also did well. I think this company needs to be bought out ASAP. I'm making a recommendation to Netflix and Lulu. Did they do so ASAP? I'm just messing around, but I love this. I watch 2 shows on there: Mayor of Kingstown and Criminal Minds. I love this channel. Now you see this 5-9. This is a company. This is a phone company that they use for businesses. When you see Shopify and 5-9 and those type of companies cooling off, it's telling us that businesses are cooling off. I highlighted this because this company means businesses are cooling off right now. And when they have less demand for phones, they do all sorts of cool things with phone lines for business. It's not good. Why do they do their clown show? They don't know any better, Cecilia. All right. Thanks, Rich. All right. Yeah, those shows are really great. All right. So now you kind of have a confirmation of what the commodities and volatility told us. Wait and see mode. We are in a wait and see mode right now. There's nothing really crazy going on. Markets are slightly down. Again, this is all randomness. There's not much here. All right. Well, let's take a look at stocks. What are stocks telling us? All right. Well, let's take a look. First of all, how strong is the momentum to the upside and to the downside? Now, Gaston sent me an email yesterday, excuse me. And Gaston said, "Roger, I'm struggling this week in the pit." And I said, "Gaston, look at the number of stocks making 90-day highs and look at the number of stocks making 90-day lows. This is all the stocks minus ETFs." Good, Moondog. Good. That's all right, Wayne. So you see, there's hardly any momentum. Like, let me show you what I mean. Let's go a week ago. 123. A week ago, 123. Today, 67. How about to the downside? Let's go back a week ago. 85. Let's go back a week before that. 56. Let's go right here. Just go back so you could see what I'm talking about. 104, 123, 177, 239, 144, 250, 141. You see what I'm talking about? And today, 67. So you don't have an 18 stocks to the downside. When you remember, these are stocks making 90-day highs. These are stocks that are starting to trend. If you have 18 stocks to the downside and 67 stocks out of 1,500 stocks, say 1,500 stocks, say maybe 1,000. Let's just say 1,000. 67. A crazy level is 450, 500. A reasonable level is 150 to 200. You have 18 stocks. These are basically all the stocks that are moving directionally. So my answer was, imagine somebody putting you in a bag and doing this to you, just shaking you. Because that's what we've seen this week, just this. And really not doing this to you, shaking the shit out of you, excuse my French. So that's why we're not making any money. There's no movement. There's no directional bias. You can't make money in a directional program when there's nothing directionally moving. It's easier to explain it here, Gaston, than online, but I think you understand what I mean. I'm sharing the stock. Oh, can I share the scans? I'll show you what they are. I'll show you what they are. Look at the stocks breaking down. Monster Beverage. This is it. These are the only stocks that are breaking down right now. And half of them are on my list. So I'd rather give you my list that I made from this instead of just giving you blanket stocks. But this is it. These are all the stocks that are breaking down, that are making new lows yesterday, that continued making lows yesterday. This is it. What about highs? This is it. And trust me, I have the best one of them highlighted for you. We'll take a look at it, Eagle. We'll take a look at it after this. Anyhow, I cover all of this. I'll cover all of this later. But my point here is there's not a lot of stocks. When you see 67 stocks making a 90-day high and 18 stocks making 90-day low, it just means the market's not doing anything. Yeah. I'm also a big Costner fan. So again, the first thing we notice is there's hardly any momentum in the market. What about stocks making 20-week highs? There's 20 of them. All right. And what about stocks making 20-week lows? Let's see. 13. So you've got 20 stocks making 20-week low, 13 stocks making 20-week lows, and you have 20 stocks, 13 making 20-week lows, and you have 20 making 20-week highs. Are you going to find a lot of directional bias there? How? Think about it. In order for a stock to make a 20-week high, it has to move up to a 20-week high. So everything is doing this right now. Again, remember, I don't look at these lists just to find stocks. I look at these lists to see which way momentum levels are moving. And you can find a lot of my codes in the VIP room per what Cam White just said. Remember, customer service live from 10 a.m. to 1 p.m., also known as the Cam Gustavo Show. And if you guys want to check out some of my stuff, here are some links for you. I'll be live again at 11 a.m. as usual in the VIP room. I'll be working from the office. Matt is back. He just had to go to a funeral yesterday. All right. So commodities are in a wait and see mode. Everybody's waiting for Fed data next week. What about stocks? Isn't that interesting? We've been here for 34 minutes and we haven't talked about stocks yet. Isn't that interesting? That's why it bothers me so much when people just come to me and say, what do you think the stock is going to do next week? Like, whoa. Back off there, cowboy. Start in the beginning, and that's the conclusion. All right, so NASDAQ 100, the futures. How are the futures looking? Well, the futures have been touching the 200-day moving average every single day since we broke down. Roger, how come you're not going long? Why are you in all of these stocks going short that are not going anywhere? You really want me to go long when the NASDAQ 100's at the 200-day moving average and it can't get off of it for 4 days straight after losing 15%? Come on. 15%. And you want me to go long here? It's got to go up. It's got to go up. It's got to go up. It's going to bounce. It's going to bounce. You're getting a deal right now. Stop that nonsense. Stop that crap. After doing this, the longer it stays here, the longer the bears will become, the faster the bulls will become complacent and the bears will start taking over. Yeah, market, and then stock. So you see how I'm not, but Roger, we're making higher highs. Okay, we're making higher highs, fine. But we're also making lower lows. We're literally at the 8-day moving average. We're bouncing down from this right now. And again, we may hit the 200-day moving average. Sure, yeah, go buy stocks right now. Sure, that's the ticket. You'd be a fool to do that right now. And again, I'm not calling you a fool. I'm just saying NASDAQ is literally touching the 200-day moving average every day for 1, 2, 3, 4 days straight. We've had 100-point moves here every day or over. And we've lost 15% and we can't get it back up. Robert, if you have internet problems, here's the solution for you. You just go to this link and you watch the replay, my friend. Yeah, top-down approach. So commodities are in a wait-and-see mode. Fundamentally, we're in a wait-and-see mode till next week. Are people going to make big bets ahead of next week? I don't think so. NASDAQ futures? Yeah, Roger, go long. Why are you short, Roger? Why are you short tech and consumer discretionary stocks? Because the goddamn NASDAQ 100's at the 200-day moving average. What else am I supposed to do? I don't know any other way to do it. I've only been doing it for 30 years. So if you're going long right now, tech stocks or NASDAQ stocks, you're just being foolish. But Roger, I made money. You're still being foolish. Because statistics will come and bite you in the ass. And remember, what happens if this breaks down right now? This will just looks like a continued downtrend. Look, see this right here? Does this look any different than this? No. So again, we're in danger zone right now. On the NASDAQ 100 futures. Danger zone, I tell you. All right, what about cash? Futures cash. Well, the cash is looking a lot better so far. This is the SPX index, although this morning it's right here. We closed right at the 100-day moving average, right at the, to confuse us a little more, we closed literally right at the 8-day EMA and right at the 100-day moving average. How's the S&P 500 looking this morning? Let's see. Down a little bit. I have all these lines here, so it's hard to see, but that's the 100-day moving average, and that's the 8-day EMA. We're literally on it, and we're red right now. And if we come down like this, it's not going to be pretty. It's not. And again, if we come down from here, it's going to look like a natural downtrend. Roger, are you saying we're going to come down from here? No. What I'm saying is that I think we're going to be in a wait-and-see mode and cool off just a little bit because we've been going up for 4 days straight after this bounce. Now, what about the futures, the S&P 500 futures? I usually don't do futures, but we're in a really interesting spot right now, so I want you guys to see the futures too. Sorry if I'm getting a little too excited about this. It's just there's a lot of stuff going on. So look at the futures. Look where we're at right now. This is real time right now. The futures didn't hit the 100-day moving average, and the futures backed off right at the 8-day EMA. Now, tell me honestly, between you and me here, we won't have to share our secrets with anybody. It'll be private, just me, you, and I, and Clyde. All right, but doesn't this look like it can just come right down here, and it would look just like another consolidation day? Tony says, I always learning, and today we got jokes too. You're rolling. You teach us so much. Well, I'm glad to hear that, Tony. Very nice of you. Very nice of you. Let me just put this on my testimonial page, and we'll move on. I'm on fire today, I'll tell you. Eagle says I've been up since 2:50. Ooh, wow, 2:50 in the morning. Yeah, I couldn't sleep since about 5:45 this morning. My wife gets up and goes to the gym or goes running before it gets too hot. So sometimes I don't fall back asleep. All right. So, folks, please, please, please be very careful. I think the heat has something to do with it too. You know, it's been kind of hot all over the place. But anyway, be careful. Please, please, please be careful. All right, let's talk about cash markets. Again, everything I just said about okay, so I gave you the NASDAQ futures and the S&P futures to show you the daily view. Now we're going to go intraday and give you levels on the cash markets, okay? So let me just pull this here. This is exciting. I'm getting so much value out of this myself that I'm starting to get a much better feel for the market than I did about an hour ago. I'm talking about me personally. All right, so how are we doing? Remember, I don't update these in real time. I update these usually after the morning. All right. Same here. Was doing calcs on the pit open trade. All right, Carlos. Hey, Dr. Serena. Good morning. Happy Friday to you. Happy Friday. Yeah, with the volatility lower, we have less people in here, but we're over 428, 41 minutes in on a Friday, and we were breaking records in the VIP room almost every day. Wow, Rebecca, you gotta get some sleep. All right, so where are we right now? Well, let me just I'm just going to raise this a little bit up to here, and I'm going to move it across. If I didn't do that, then it would be here, which still puts us back into this level. Just to give you some perspective, here's where we're at right now. The first level we need to focus, and again, if you see me moving these up or down, it's because my hand moves. It's not because I'm trying to screw the levels. The level to the bottom side that we want to break today is 441.81 on the QQQ. And if we break that level, the next level is right here, which is the pivot from yesterday, which is 430. And then the next level is 422. So let me again give you, and again, I'm not trying to screw with you by moving this, just my mouse and the finger just kind of moves around. So we got the level we want to go above. Let me erase this right here. The level we want to break today is 448, 449. There's some really strong support resistance right here. You could see there's a lot of resistance at the 455 level. And if we break below 442, the odds are we're going to go to 431. All right. If you guys want, I'll post this in the Telegram channel later today. Just say yes, and I'll post this in the Telegram channel later today. Let's do the same levels for the S&P 500, okay? I have never seen any correlation between astrology and the markets. I've never seen any. I'm not saying there isn't one. I just haven't seen it. All right. What about the S&P 500? Let's go to the 5-day. Let me just connect this. Now, this is called the connect the dots session, right? I know T-Bus has a connect the dots session. This is literally connect the dots session, right? Because we're literally connecting the dots on the screen. Anyway, sorry, I just thought it was funny. So we tried to break 532.50. We tried it twice. We couldn't do it. Now the question is, are we going to stay in this tight range? Probably not. Or are we going to go back down and break below 528? All right, I'll post it in the Telegram after the market opens. Okay, I'll do it. I'll post them both. I'll post the NASDAQ and the S&P like an hour after the market opens, okay? I'll do that for you guys. Now, if we break the level where we're at right now, 528.30, we don't have any support till right here. See, I'm literally connecting the dots, right? T-Bus talks about connecting the dots. I love T-Bus, but I'm actually connecting the dots. I'm going to have to tell him about that one. He's going to find it funny. So 528, the next level is 519. We have quite a big lull here. So if we go down, we're going to go down. What about upside? It kind of frustrates me that we weren't able to break higher here at night. But if we do break higher, 532.50, we're going to probably go all the way to 538. So I will, and I'll post this. What about the Dow Jones? Let's look at the Dow. I'm not really as focused. Now, why am I not focused on the Dow? And why am I not focused on the equal weighted SPY and the equal weighted S&P? You notice I haven't talked about it in the last few days because we're not seeing FANGs outperform other stocks. We're seeing a pretty good balance in the market between the large caps and the smaller stocks. That downside move that we had, starting with Google, the one that happened the last 3 weeks, that took FANG stocks and put them right in line with everything else. So there's not that much of a discrepancy right now between the FANG stocks and the medium cap stocks. So we don't need to kind of look at them back and forth. We will at one point, but not right now because of that correction that the FANG stocks had. Okay, the Dow couldn't break this level. Hey, look at that. My drawings are pretty accurate. Look at that. Right here. We couldn't really break this level. We're back down here. Keep an eye on 39,500. Keep an eye on 39,500. Right, because FANGs are not as big of a factor in the moment. They seem to have evened out after earnings. So the question is, are we going to go above 39,500 or are we going to go back to 39,000? That really is the question for the Dow. You guys want me to do the same thing for SMH? Let me do it for SMH. This will be the last one. I want to move on because I have a lot of stuff to get to today. Here's SMH. SMH did go above this level, but SMH, the levels for SMH are 233.50. I'm just rounding it up. And to the downside, it's 222. So you got 234 and 222. And then the next level, let me just delete this here. The next level is right here. And then the next level is down here. And again, I will be updating you. I will be updating you with all of this as the day goes on in the pit, as you guys know. So if we break this level right now where we're at on the QQQ, look, just to show you, if we break this level, we can go down. If not, we can go up all the way up here on the QQQ. We're going to find out today where we're going to go. Again, be careful. Markets are very, very fragmented right now because we're all waiting for next week, and we're feeling, and it's literally, we've been shaken in a bag. Momentum levels, well, they're looking a lot better than they did yesterday. S&P has 67% of stocks above the 200-day moving average. That's very healthy, but only 54 above the 50-day moving average. The culprits are obviously the discretionary stocks. Energy's not helping. Information technology, basic materials, And these can have more downside, okay, as I'll show you right now. See where we're at right now? We haven't bottomed out yet. We haven't bottomed out yet. See, look at the 10 years. When it bottoms out, we go down here below this level. We're not below that level yet. I thought I'd show you this text sector. Okay. So be very, very careful. NASDAQ 100, only 53% of stocks are trading above the 200-day moving average. This can easily fold and would create another vulnerability in the tech sector if it did. Okay. So again, momentum levels are kind of, look at that, 53%. We're in a wait and see mode. Or let's talk about sectors. I'll have plenty of time to go to work today. It's so funny. I start working here at 8, but I don't consider myself being at work till I actually get there. I probably don't even have a job if you ask me. Like, I don't consider this work. I consider this highly entertaining. All right. What did I tell you all last week? Or what? No, what did I tell you all this week? Defensive, defensive, defensive. Yep. I agree with you, Cam. What Cam just said. Consumer staples, defensive, industrial, utilities, healthcare. This is Dow. This is blue chips. This is defensive. This is flight to quality. And this is flight to quality right here. Notice real estate is up here, but home builders are down here. Big, big difference. Not home builders, real estate, commercial real estate, apartment real estate, real estate, real estate. Defensive, defensive. Roger, why are you short all those consumer discretionary and tech stocks? Well, look where technology is. Look what Russell is. Look what consumer discretionary is. Now, look at QQQ and the semiconductors. They're starting to get interesting. The next step is interest rate sensitive stocks taking the lead or technology stocks taking the lead or this completely falling apart once again. I don't know what will happen, but I'm telling you right now, be very, very cautious. The markets are what the sectors are telling us right now, and this you'll get a lot more value out of this than you will from moon signs. Okay, this is telling us that the market is still very nervous, but starting to become hopeful. All right, like yes, look, 2 days ago, beginning of this week, semiconductors, technology, consumer discretionary. But look at today. That's Monday. Look at today. Semiconductors, technology starting to come up a little bit. But interest rate sensitive stocks are still down here. So we got to be extra careful. It's still nervous, but starting to get a little hopeful. That's what the market is seeing right now. If you start seeing technology continue to come up here, then it'll be a different story. Not sure that will happen. All right. NASDAQ is down 100 points right now. Dow's down 100 points. We all know that volatility has been very crazy lately. We're not going to make heads or tails out of this just yet. We're going to wait for the market to open to see what happens. Already talked about Fed data. Let me talk about the stocks that I'm looking at today. Now, that list that you guys wanted me to show you, I look at that list and I've given the best stocks out of that list. So let me give you guys some cool ideas, okay? Now, I don't know if these stocks are going to hit it on the actual trades, but I want to show you some cool stuff. Foot Locker is setting up to be a possible gap to green trade. Ooh, a gap to green trade. Look. Look at the gap here we have. I don't know why it's doing that. Hold on. See the gap we have here? Possible gap to green here. Possible. I didn't say it was going to happen. Possible gap to green here. We have a possible A-line trade on Johnson & Johnson. Possible A-line trade. We have a possible A-line trade on Electric Arts, which I gave you for free in the class the other day. Look at that. And look at the nice trend we have here. Possible. I said possible. So don't say, and also one more. Today's Friday. I'm going to be giving you goodies, and also HWM for a possible A-line trade. These are all longs. All I've been talking about is longs so far. All right, now let me show you my other longs from my regular hit list, okay? We're doing longs today first. Those were just non-momentum. Those were A-line and gap to green. See how I'm giving you a little here, a little there, a little everywhere? Upstart, bullish. AbbVie, still bullish. Took a little profit on that yesterday, by the way, in one of our programs. You're welcome. Or day before yesterday. The only tech stock I'm actually bullish on right now, I think. Looks beautiful. Look at that stock. Oh, no, there's T-Mobile too. T-Mobile. I hope you guys are writing this down. PSN. These are all longs. So far, I've only talked about longs are CPT, UHS. This one hasn't been on our list in a while. Starting to come back up. ZTS. And one more, PSA. That's my long list. That's the long list, okay? Nice. Nice, RJ. Let me now hey, 457. There we go, Dr. Serena. No problem, Wayne. No problem. I got to get out of here too. So just a few more minutes and I'm done. Short side, GTLB. Now, out of the 30 stocks that we had, I found a few that I like. A few. GTLB, ATKR. Notice not a lot of large stocks breaking down and not a lot of large stocks breaking up either. Look at this. What a crapper. Dollar Tree, the first big one we have. Nice one right there. And this one, Vacation, Marriott Vacation Worldwide. That's it, folks. That's my list. All right. Please check out my replay of my seasonality windows. You'll get a lot of red meat there and some free tidbits that you can use. Please check out my VIP room at 11 a.m. where I will do the second part of this and talk about whether it's time to do straight options, debit spreads, or credit spreads because of the implied volatility. Give you my updated list and talk about what I'm seeing in the afternoon ahead of Monday. I'll see you guys at 11 a.m. Cam and Gustavo show from 10 a.m. to 1 p.m. I'll see you guys later. Good luck. I'm in the hospital for lung biopsy. Zen Master, good luck to you. I will talk to you later and have a fantastic day. Bye, everybody. Thank you, guys. See you then. Bye, Angie. Take care. Bye, guys. Thank you for being here. Thank you for sharing Friday with me. And thank you for the congratulations on my son. I really appreciate it. Bye, guys. You may see Clyde today. You never know how things go.